If you are looking for an investment thesis that promises just massive returns, the kind that almost sound too good to be true,
Right.
then you really need to lock in on what we're diving into today. We're looking at a very specific analysis report. It's centered on the company RZLV AI, ticker RZLV.
We're focused on the potential for RZLV to become, a future tech powerhouse.
Exactly.
We're dissecting a really extraordinary claim that this stock, which just saw a 7% jump to $3.25, has a potential upside of 300 to 500%.
That is the ultimate hook, right? We're talking about price targets that some analysts believe could take this stock as high as $15.
Incredible numbers.
So our mission today is to move past that massive headline number and ask the crucial question. How do they justify it?
Right.
Does the fundamental analysis in this report actually support that kind of potential? And what has to happen for the market to see RZLV not as an early stage venture, but as a market leader?
Exactly. We're not here to cheer for the stock. We're analyzing the structure of the argument itself. And the whole valuation, according to this research, it really hinges on two things.
Okay.
First, the success of their core tech, which they call agentic commerce. And second, whether their upcoming financial catalysts actually materialize. This is a story of technology meeting a very specific timeline.
Okay, so let's unpack that valuation disconnect first. We have this bullish analysis arguing for a road to $15.
Right.
But the stock is trading around $3 today. What are the concrete Wall Street numbers supporting this claim that there's a 5x opportunity here?
Well, the consensus is strong, and that's the first thing you look for. The report highlights that the current sentiment on RZLV is a strong buy. Why?
So this isn't mild optimism.
No, not at all. It's a belief that the current price just fundamentally undervalues the technology.
And the targets are, they're incredibly aggressive. The report says the average price target is sitting at $10.79.
Which is already, a 250% upside from where it is now.
Exactly. But the street high target, the one that's driving that 500% narrative, is $15.75.
And what's fascinating here is just this sheer disconnect that the research points out. When a stock is at $3 and analysts are calling for 15,
they're pricing two different companies.
they're pricing two different realities, essentially.
So here's where it gets really interesting. How do you bridge that gap? The market is pricing RZLV like a classic early stage company, a penny stock, still figuring things out, burning cash.
Right. That $3 price is a reflection of present-day financial risk and uncertainty. But the analysts writing these reports, they're doing something else entirely.
They're looking way down the road.
They're modeling its future as if it will become a future large-cap tech player. They're pricing in success years from now based on the market they think it can capture.
So the analysis is essentially saying, ignore today's losses. The optimism is rooted 100% in a vision for tomorrow.
A vision called agentic commerce.
And if you don't believe in that vision,
you won't believe in the target. It's that simple.
Yeah.
The key to unlocking that, that $12 valuation gap lies entirely in believing in the potential of this technological shift.
Okay, so let's define it. Let's move beyond the numbers. What is agentic commerce? What is this brain suite they talk about?
The report defines RZLV's offering as a foundational layer for purchasing. It's way more than just another app or some e-commerce plugin.
They're trying to eliminate steps.
They're trying to eliminate the entire traditional process of buying something online.
And that elimination of steps is what they call targeting the friction in retail. Let's put some context around that. How big of a problem is that friction?
It's a huge problem.
Yeah.
In e-commerce, friction is everything that happens between seeing a product and actually checking out.
Like abandoning your cart?
Exactly. Cart abandonment rates can be 70% or higher. Or just the effort it takes to find something you saw for 2 seconds on social media.
Yeah.
The analysis argues this friction is a $1 trillion problem.
$1 trillion problem. That is a breathtaking scale. Now, the way RZLV addresses this is through agentic commerce. Give us that memorable example they use.
So the concept is really powerful because it turns passive viewing into an active transaction. Imagine you're watching a video, maybe a product review, or you hear about a gadget on a podcast like this one.
Okay.
Agentic commerce means your device, powered by their brain suite, instantly identifies that product and lets you buy it with literally one tap.
One tap. No opening a browser, no searching, no scrolling, and this is key, no entering your payment detail.
None of it.
That would be genuinely revolutionary if they can pull it off at scale.
And that capability, that instant purchase, relies entirely on their proprietary large language models. This is their technological mode.
So they're not just using off-the-shelf AI.
No. The report is clear on this. RZLV has trained their LMs specifically for rapid transaction parsing and catalog matching. They have unique, retail-focused data sets.
So this Brain Suite is a specialized architecture. It's built to handle that instantaneous link between discovery and purchase.
Exactly. They're positioning themselves to be the invisible back-end infrastructure that powers AI shopping globally.
They don't want to be the storefront.
They want to be the engine. The engine that turns any moment of discovery in a video, an ad, even augmented reality into a monetizable transaction for a retailer. That is the strategic value that analysts are seeing.
Okay, that context makes the $15 valuation make more sense, but it also highlights the tremendous execution risk.
Of course.
We're talking about going from a $3 stock that's burning cash to dominating a $1 trillion market. What does the analysis say about today's financial reality?
We have to address the financials. The current price reflects that they're in a heavy R&D phase. They're spending a lot of capital to land these big foundational contracts.
And that cash burn is why the stock is down in the $3 range.
It's exactly why skeptical investors are on the sidelines. They need that capital to land the whales, so to speak.
It's a classic scaling risk. So what are the explosive growth forecasts that are needed to justify that $15 price?
The roadmap here is all contingent on mass adoption by large retailers. The analysts project that as these big enterprise contracts go live, revenue will just explode.
Explode to what?
Hitting over $100 million in 2026 and 2027.
Over $100 million in revenue from a company that's barely on the board right now. What kind of growth rate are we talking about?
We are talking hypergrowth. Annual rates somewhere between 85 and 115%.
Wow.
That's the kind of exponential trajectory you need to bridge the gap between a $3 valuation that prices in risk and a $15 one that prices in near-perfect execution.
Which brings us right to execution and timeline. That kind of growth hinges entirely on them going from pilot programs to full deployment. What are the upcoming catalysts the report says investors have to watch?
The analysis highlights two crucial near-term events. These can trigger market movement because it's all about demonstrating execution.
Okay, what's the first one?
A major industry event, the NRF 2026 Retail Big Show.
The National Retail Federation show. That's where all the major players make their big tech decisions. Why is that so important for RZLV?
It's their stage. It's their chance to showcase this agentic commerce tech to the biggest partners in the world. If that showcase is successful.
Meaning they announce new deals.
Right. If they announce or even just strongly signal one or more major multi-year contracts, it validates those massive revenue forecasts. It moves the whole story from speculation to signed deals.
And the second date is much sooner, which makes the timing here critical. It's a management update webcast on January 13th, 2026.
That webcast is critical. The analysis notes that traders are expecting concrete news on initial deployments and forward guidance. This isn't just a routine check-in.
It's an expected reveal.
An expected reveal of whether they are hitting their milestones.
So the report points out a time-sensitive trading theory here, doesn't it?
It does. The market is forward-looking. Stocks with big catalysts coming up often run up before the news officially drops.
So if you wait for the 13th,
you might miss the initial move. The implication is that if you wait for confirmed news, you may have missed the appreciation that's tied to the market's anticipation. That's why watching the technicals right now is so important.
Okay, let's shift to those technicals then. Specifically, that recent 7% pop. What did that move up to 325 signal to the analysts?
The chart showed a definite shift in momentum. It suggests that dedicated buyers were finally stepping in. The stock gapped up at the open to 307.
Signaling enthusiasm.
Right. And then it hit a high of 348 during the day.
Strong movement. But the finish is what matters, right?
Absolutely. The critical detail in the report is that the closing price held support over $3.25. In technical terms, that means buyers are aggressively defending that price point.
So what's the big picture interpretation of that action?
The analysis reads this as confirmation that the bottom might be in. The stock hit a low of $1.07. This action suggests that whole consolidation process is over, and now it's starting the structural climb back up.
And for short-term validation, what's the immediate hurdle that the report says to watch?
The 350 level. That's the line in the sand. If RZLV breaks convincingly above 350, the report suggests this could trigger a squeeze higher.
Okay, for the listener who isn't a trader, what does a squeeze higher actually mean here?
It usually means two things. First, it brings in more fundamental investors who see the price action, confirming the bull case. But second, and more importantly for speed, it forces short sellers people betting against the stock to cover their positions.
Which means they have to buy shares.
So you have to buy shares quickly. And that sudden demand can drive the price up very, very fast.
This all circles back to the core argument. It is a binary bet on execution. What are the risks that the report addresses?
Well, while it's overwhelmingly bullish, it does caution that the timeline is aggressive. The single biggest risk is competition.
From a big player.
Yeah, if a tech giant with deep pockets, say a Google or a Meta, releases a similar fully baked product before RZLV can lock in its enterprise contracts, their whole advantage could just evaporate.
And the other risk is just delays.
Delays or a reduction in scope. If those big 2026 or 2027 contracts get pushed back, that would immediately undermine the entire $15 valuation model.
So that $15 target is not a guess, it's a roadmap. And it's totally contingent on them successfully transitioning from tech in the lab to over $100 million in revenue.
Absolutely. The conclusion from the analysts is clear. The risk is high, but the potential reward looks massive. Because if they capture even a tiny fraction of that trillion-dollar retail friction market, the current valuation is unjustifiable. For you, the listener, your assessment has to hinge entirely on your belief in their ability to execute that transition in the next 2 years.
Right. That execution is the only bridge from $3 to $15.
It's the only bridge.
This deep dive really gives us a clear framework for how analysts bridge that kind of massive valuation gap. They're not looking at current earnings. They're placing all their confidence in proprietary technology, this agentic commerce, and the sheer size of the projected revenue growth.
And that shift in consumer behavior leads to a crucial question for you to consider.
Yeah.
Given that RZLV's model seeks to basically eliminate the friction between discovery and purchase, think about the broader implications.
Okay.
How might agentic commerce fundamentally change the very definition of impulse buying? If every piece of media you consume instantly becomes a frictionless one-tap transaction, what happens to that natural pause a consumer currently takes? And how might that alter the psychology of shopping entirely?